Hi, we are in the sixth complete comprehensive example in the chapter of dissolution of partnership firm. Let's go to the example sum. Example sum: A and B sharing profits and losses in the ratio of 3:2 agreed upon the dissolution of the firm on 31st March 2019, at which date the balance sheet was as follows. To the left of the screen, we have the balance sheet given. On the right, additional information. The firm was dissolved on the given date and the following transactions took place. First point, A took 50% of the stock at a discount of 20%. Second point, remaining stock was sold at a profit of 30%. Third point, rupees 12,000 out of the sundry debtors were not recovered. Fourth point, land and building realized rupees 1,40,000. Point 5, half of the trade creditors accepted plant and machinery at 10% less than the book value and cash rupees 5,000 in full settlement of their claims. Point 6, remaining trade creditors were paid at a discount of 10%. Point 7, realization expenses were rupees 5,000. Point 8, Z, an old customer whose account was written off as bad debt in the previous year, paid rupees 500. The ninth point, a contingent liability of rupees 1,000 was discharged. The final point, furniture was sold for rupees 10,000. We are asked to prepare the realization account, the partner's loan account, partner's capital accounts, and the bank account. So we'll begin the solution by preparing the realization account. Then we'll prepare B's loan account, then the partner's capital accounts, and finally the bank account. Any working notes we will do at the end of the sum. So let's go ahead with the solution. Solution: realization account. Left side debit side, right side credit side. Particulars: rupees particulars rupees. We'll begin by transferring the sundry assets. Two sundry assets transferred. Stock 80,000 rupees. Debtors 66,000 rupees. Plant and machinery 30,000 rupees. Land and building 33,000 rupees. Furniture 10,000 rupees. Goodwill 15,000 rupees. And lastly, prepaid insurance 1,000 rupees. Let's get the total of the assets transferred. $2,35,000 is the total of the assets which have been transferred. We'll begin by transferring the provision for bad and doubtful debts to the credit side of the realization account. By provision for doubtful debts account, 6,000 rupees. By creditors account, 80,000 rupees. By bills payable account, 25,000 rupees. Loan by B. B has given a loan to the firm. It's an internal liability of the firm. We'll open a separate account for that. So all the external liabilities have been transferred. Let's go to the additional information. First point, A took 50% of the stock at a discount of 20%. So by A's capital account, for stock taken over, the book value of stock is 80,000 rupees. 50% is 40,000 rupees. And 20% of 40,000 is 8,000. So on deducting 40,000 minus 8,000, we get 32,000 rupees, the value at which A takes over 50% of the stock. Next, we'll write the entry for realization of assets by bank account. We'll begin with the second point, stock. It says remaining stock was sold at a profit of 30%. The remaining stock book value is 40,000 rupees. 30% profit comes to 12,000 rupees. So its amount realized is 52,000 rupees. Point 3. 12,000 rupees out of sundry debtors were not recovered. Out of 66,000 gross value of debtors, the firm didn't recover 12,000 rupees. So amount realized from debtors is 54,000 rupees. 66,000 minus 12,000 rupees. Fourth point, land and building realized 1,40,000 rupees. So 1,40,000 rupees from sale of land and building. The fifth point is about payment to creditors. We'll come back to it. Sixth point is also payment to creditors. We'll come back. The seventh point is about the realization expenses. We'll come back to that also. The eighth point, we are recovering bad debts from Z, an old customer whose account was earlier written off as bad debts. So it's bad debts recovered. Amount 500 rupees. The ninth point is about a contingent liability being discharged. We'll come back to that. And the last point is about furniture realized. Rupees 10,000. So let's get the total value of assets which have been realized. ₹2,56,500 rupees is the total amount realized from sale of assets. Let's go to the payment of liabilities. We'll begin with the fifth point, to bank account. It says half of the trade creditors accepted plant and machinery at 10% less than book value and cash rupees 5,000 in full settlement of their claims. So half of the trade creditors have been discharged by taking over an asset for which there will be no entry. But however, for the payment of rupees 5,000 in cash for the creditors, you will have an entry. So realization to bank for 5,000 rupees. This is the first part, half of the creditors. The sixth point says remaining trade creditors were paid at a discount of 10%. The remaining trade creditors is half of 80,000, which is 40,000 rupees, and it's paid at a discount of 10% or 4,000 rupees. So amount paid to the second half of your creditors is 36,000 rupees. We'll pass a separate entry for realization expenses, the seventh point. The ninth point says a contingent liability of rupees 1,000 was discharged. So contingent liability under to bank account 1,000 rupees. Total amount paid for liabilities 42,000 rupees. Realization expenses as per the seventh point, 5,000 rupees borne by firm, paid by firm. So to bank account for expenses 5,000 rupees. All the entries are done. Let's check if all the external liabilities have been paid off. The creditors has been paid off. It's been discharged. However, the bills payable has not been dealt with. So we'll pay off the bills payable at book value. So to bank account for bills payable, book value is 25,000 rupees. So all the entries are done in the realization account. I'll remove the split and we'll find out the gain or loss on realization. We'll total up the credit side first. Credit side totals to 3,99,500. Debit side totals to 3,07,000 rupees. The greater total on both sides, 3,99,500 rupees. To gain on realization, transferred to A capital account and B capital account. The total gain 3,99,000 minus 3,07,000 comes up to 92,500 rupees. This has to be divided in their profit sharing ratio of 3:2. On dividing by 5, we get 18,500. So against B's capital account, it's 18,500 multiplied by 2, which is 37,000 rupees. And against A's capital account, it's 18,500 multiplied by 3, which is 55,500 rupees. So this is a realization account. Next, we'll prepare B's loan account. B's loan account. Left side debit side, right side credit side. Particulars, rupees, particulars, rupees. We'll bring down the balance of B's loan account from the liability side of the balance sheet by balance brought down 15,000 rupees, and the firm pays off the partner's loan to bank account 15,000 rupees. The account balances. There is nothing left to be paid on account of B's loan. So this is B's loan account. Next, let's prepare partners' capital accounts. Partners' capital accounts. Left side debit side and right side credit side. We have particulars, partner A, and a column for partner B, particulars, a column for partner A and a column for partner B. We'll begin by bringing down the balance of the capital accounts by balance brought down. 90,000 in the case of partner A and 30,000 rupees in the case of partner B. Let's distribute the reserve by reserve account. Amount of reserve 34,000 rupees to be divided in 3:2 ratio. On dividing by 5, we get 6,800. In the case of A, it's 6,800 multiplied by 3, which is 20,400 rupees. And in the case of partner B, it's 6,800 multiplied by 2, 13,600 rupees. We'll distribute the profits, accumulated profits, by profit and loss account. Profit amount 11,000 rupees to be divided in profit sharing ratio 3:2. On dividing by 5, we get 2,200 rupees. In the case of A, it's 2,200 multiplied by 3, which is 6,600 rupees. And in the case of B, it's 2,200 multiplied by 2, which is 4,400 rupees. We need to write off the advertisement suspense expenditure shown in the asset side of the balance sheet. 10,000 to be written off in 3:2, 6,000 against partner A and 4,000 against partner B. There's a loan to A, 10,000 rupees given on the asset side of the balance sheet, representing a loan borrowed by partner A from the firm. We'll transfer that to A's capital account. To loan to A account, 10,000 rupees. We'll go ahead to the realization account to find out the assets and liabilities which have been taken over by the partners. A takes over stock at the value of 32,000 rupees. So to realization account in A's capital account, assets taken over, amount is 32,000 rupees. There are no liabilities which have been taken over by any of the partners. We'll transfer the gain on realization by realization account. In the case of partner A, it's 55,500 rupees. And in the case of partner B, it's 37,000 rupees. We'll balance the account to get the amount of the final settlement. In the case of partner A, the credit total is greater, totals to 1,72,500 rupees. So to bank account for the final settlement. The total of the debit side comes to 48,000 rupees. So it's 1,72,500 minus 48,000. Comes up to 1,24,500 rupees balancing figure. The case of B also, the credit side total is greater. Comes up to 85,000 rupees. Balancing figure after subtracting 4,000 rupees is 81,000 rupees. So this is the partner's capital accounts. Next, let's prepare bank account. Bank account. Left side, debit side, right side, credit side. Particulars. Rupees. Particulars. Rupees. We transfer the balance of bank account from the asset side of the balance sheet to balance brought down. Balance of bank is 30,000 rupees. There's a balance of cash also. We will take the cash and deposit in the bank to cash account, 6,000 rupees. We'll move on to the realization account to find out the amount which is realized from sale of assets and payment of liabilities, the amount paid. So to realization account for assets realized, the amount, total amount realized from sale of assets, 2,56,500 rupees. Let's get the information of payment for liabilities by realization account. Liabilities paid 42,000 rupees by realization account. For expenses on realization, 5,000 rupees, and by realization account for payment of bills payable, amount paid 25,000 rupees. We'll go on to B's loan account. The amount paid for B's loan, 15,000 rupees. We'll go on to the partner's capital account to get the amount of the final settlement by A capital account for the final settlement. ₹1,24,500 rupees. And by B's capital account for the final settlement, 81,000 rupees. Let's check If the cash bank account tallies, the debit side totals to 2,92,500. The credit side also totals to 2,92,500 rupees. So this is the bank account. I'll remove the split and we can view all the accounts together. We began with the realization account. Then we discharged the internal liability of the firm, B's loan. Then we prepared the partners' capital accounts. And finally, we prepared the bank account. There were no working notes for this problem.